Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started. Good morning. Today is Tuesday, October 19th, 2010. This morning, we're talking about read my lips. And it's not the George Bush Sr. No new taxes mantra, but we're actually talking about Treasury Secretary Timmy Geithner. Now, you heard a joke here. I'm just going to tell it to you. It says, how do you know when Secretary Geithner is lying? Well, the answer is his lips are moving. But I'll be here all week. Try the veal. No, but seriously, yesterday Geithner came out and he vowed that the U.S. was not devalue the dollar to gain an exporting advantage in the global economy. Well, I'm guessing right now he's probably playing the semantics game, as these comments are disingenuous and best. When you talk about further quantitative easing, okay, that is a form of currency manipulation, and while technically the easing doesn't devalue the dollar, all right, it's all the people that come in and then in turn sell the dollar, which causes the dollar to devalue. So technically he's correct, but it's a little bit of a semantics game right there. Now the reason that everyone's sort of backing away from this QE2 statement is because the initial statements that they made actually allowed the dollar to depreciate rather quickly. And this weekend we've got a G20 meeting going on where this currency race to the bottom is bound to be a huge topic. And nobody wants to walk into the meeting this weekend and be labeled a manipulator by everybody else. So they're going to turn around and say, no, look at this. We were saying that we want a strong dollar, and that's going to basically get them through the weekend unscathed. I'm guessing that this dollar weakness could continue next week. I mean, it really is just sort of a silly game here, but you see it played all the time on the world stage, and it's really a shame. But in some other news, Canada. Well, I guess we can talk about Canada. Let's take a quick peek here real quick. Let's see where we go. Dollar Canada. All right, you can see here, big move today. Dollar strengthened versus the loonie. All right, Bank of Canada came out and they kept the interest rates at 1%, and they said they're going to sort of wait it out, see what's happening with the global economy. But right now, the recovery is still pretty fragile. All right, then we also have Aussie weakness as well. You can see here, Aussie pulled back from that parity level with dollar. The minutes of the RBA meeting came out, and they said that they were taking a fairly balanced approach, a finely balanced approach, as risk to global growth and their rising currency value may have helped ease inflation concerns. So that's what's going on there with the Aussie. Now, also contributing to Aussie and also to Kiwi weakness, we can just look at the Kiwi right here. All right, it was news that China raised its benchmark interest rate for the first time since 2007. They're going to attempt to deal with inflation over there, but there's some fear in the market because China's basically been leading the global recovery. So if their economy slows, what's that going to do to the rest of the world? So we've got risk aversion going on today, dollar strength ahead of this G20 meeting. That's the big theme that we're looking at. Just want to look here at pound real quick, pound versus dollar. Let's see here. All right, I've set up a quick little Fibonacci retracement here on the most recent swing low to swing high, and you can see here looks like we could see pound approach 156, which is a 61.8% retracement level. Now they're going to release the minutes of the Bank of England rate policy meeting tomorrow, and this one's actually going to be pretty interesting because you've got three dissenting opinions going on right now. You've got Andrew Sentence there, who's been calling for rate hikes for who knows how long. All right, you've got Adam Posen on the other side calling for further quantitative easing. All right, and then you've got sort of the middle of the road guys who aren't sure what to do. So it's going to be interesting to see what happens in the pound because further quantitative easing could induce inflation, which is already at the top end of the Bank of England's band. All right, and it may not continue with growth. If they do nothing, then growth could stall on its own. Inflation could continue to ease higher. All right, if they actually raise rates, then that would potentially, fight inflation, but that could also cause growth to slow more rapidly. So it's a fine balance they got going on over there in the BV. So it's going to be interesting to see what they do tomorrow. But either way, I'm expecting to see a little bit more pound weakness. Now, of course, if they back away from the quantitative easing statement altogether, we could see a bounce right here off this 50 50% retracement level right at 157. So we're going to keep an eye on the pound for tomorrow. In the Eurozone, Euro's down today, anti-dollar sentiment. You can see that. Just showed basically a little double top here above 140 yesterday. They came out with the ZEW economic sentiment figures, and the Eurozone was a little bit more excited than they were in Germany. The current situation figures came in better than expected, as did the economic sentiment numbers. In Germany, economic sentiment figures came in a little bit worse than expected. So you can see how Germany sort of leads the Eurozone. I mean, that's no surprise, but it's sort of like the rest of the Eurozone lags Germany, if you will. So we're going to have to see what happens here with the Eurozone economy going forward, but you can see that Euros pulled back from 140 versus dollar. All right, and then lastly here, let's take a look at the yen real quick. We've got some yen strength here versus dollar. All right, we're not going to get any more Fed rhetoric this week about quantitative easing, so dealers are using that as an opportunity here to push yen higher. Now, this could actually be setting up for sort of a further jumping off point, if you will. We've got the Fed meeting coming out on, I believe it's November 3rd. Which is the day after the elections here in the U.S., November 2nd. So, the Fed might try and maybe talk up dollar a little bit, get some dollar strength going, so that when they do turn around and do the quantitative easing, all right, it just brings us back down to right where we were and not much further. So we're going to have to keep an eye on that and see what happens. But as I wrote yesterday, this week's all about hearing everybody and their brother telling each other that they're not currency manipulators. It reminds me of that child's game. I know you are, but what am I? You're a currency manipulator. No, I'm not. I know you are, but what am I? So it's a little bit silly when you think about it, but that's kind of what's been going on here, in the global economy. So you're going to hear a lot of rhetoric this week. Going to have the G20. Nothing's really going to happen at G20. And then next week, it's back to economic data, and the proof's in the pudding. You can't go by what these guys are saying. You have to actually look at what they're doing. So there are still some global growth stories out there. You just got to remember that they might not always be in your home country, and that's the beauty of the currency markets, is that I don't need U.S. growth for me to participate in market gains. Okay, I can use currencies to invest in countries that are performing well economically. All right, and conversely, I can sell countries that aren't doing well, and that really gives me an advantage in the global marketplace, which is basically what we're in today. So a lot's changed over the years, and if you're not in currencies, I highly recommend that you think about getting involved sooner than later. So that's what I've got for today, folks. Good trading to all. As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.